All right, good morning. Man, you guys ever look at the clock and say, holy smokes, it's time for class? That's what I just did. Oh my goodness. I was talking with my brother over on the side and I was like, man, let's go make some people think about rules today. How's everyone doing? Good morning, Chris. Good morning, Mike. I didn't realize today was a D-Day anniversary. Happy D-Day anniversary. Guys, my name's Mark. For those of you, do we have any new people in here? I hope we do. I love it when new people show up. Guys, I am the broken record of Nexgen. I'm going to talk about rules. I'm going to talk about advantages. I'm going to talk about all the things, the simple things that are going to get you where you want to be. Um, hey guys, we're going to talk about, you're going to hear me say simplicity a lot today. And if you've been with Nexgen any amount of time, what you've probably realized is that the less you try, the easier it becomes, if that makes sense. Um, the less you chase, the more you catch. The less you look at, the easier it is to make decisions. So we're going to focus on that a little bit. We're going to focus on simplicity. Guys, I'm real excited. The market hasn't been doing a lot, which means that we have more time this morning for questions, guys. There's a lot of you that are kind of working through your plans, right? You're saying, well, I'm looking for this, but I'm thinking about that, and I'm curious about this look. And Mark, maybe there's this management thing that I'm working on. Hey, good morning, Safia. Um, Guys, when the market is a little slower, a little range bound, these are your days to work on your plans, to fine tune, to go through, to ask those questions. So as we go through the day, I don't want you to be afraid to interrupt. I don't want you to be afraid to say, "Hey, Mark, man, can we take just a second and let's talk about termination conditions. Let's talk about good tops or bottoms. Mark, let's scroll back through our large charts and look at termination conditions and really define them and make sure that I'm clear." That's what I want from you guys today. I want to hear a lot of voices, a lot of raised hands. Keep this from being a lecture. Let's make it a discussion, right? One of the great things about this classroom is it is interactive. You ask, I answer, we work together, and if I don't have the answers, well, then I look left and pull up Skype real quick and ask John Novak, right? Good morning, David B. Nice to see you. Before I do anything, I always go to forexfactory.com. I'm taking a look at news, guys. I'm not worried about news releases or what it says. I had a gentleman on the golf course yesterday. He's like, "Oh, so you day trade? Work um, always comes into play when you're on the golf course. What do you do? What do you do?" And he went right into, well, with the Saudis and this and that and oil and what do you think's going to happen? And it was kind of nice. My answer was, I don't care. I don't care what happens. I don't care if oil goes up. I don't care if oil goes down, guys. What we're doing here, we can find a way to get paid no matter what happens, no matter what the news is, no matter what the reaction is. We have a simple set of rules that creates an advantage where we can go long or short. We can buy or sell. So I check news, but I'm not worried about what they're saying. I'm only looking for reactions, right? I'm looking for high impact expected reactions. I'm looking for medium impact expected reactions, things that may move the market, that may make it a little crazy. Today is Tuesday, June 6th. It's tentative economic optimism. Um, some people may potentially be optimistic about the economics, I suppose, right? But it's low impact. And it may or may not happen. Guys, if there's a spike in the middle of the day, well, then we know what happened, right? But it may not. So let's just focus on the rules today and enjoy the ride. I'm going to go to the Nexgen webpage, guys. A lot of great information on here. Everything that I talk about comes from here. Some people, I've done things before. They're like, hey, join this, do this, we got this. And then you join it and they're like, all right, for another 80 bucks, I'll give you this. For another $100, I'll give you this. For another $5,000, I'll give you this. Guys, your education page is going to have everything that you need to be successful. And I mean everything, right? It's going to talk about rules. It's going to put a plan in place. It's going to give you anything that you need to be able to take a high probability trend trade, a trade that typically wins 70 to 80% of the time, right? A trade that wins more than it loses, a trade that has advantages. Every time you take this trade, every chart's going to agree with the trade, guys. Every indicator, you're going to have your strongest triggers, nothing in the way. You're going to be able to pinpoint your entry areas using Fibonacci, using these trigger lines. And a trade really is nothing more than a combination of three advantages. A trade equals momentum, plus a clear path, plus an entry area. My job today is to show you visually momentum, strong triggers, and then reinforce those rules with you. My job is to teach you how to recognize a clear path, and my job is to show you how to identify that entry area where the market is most likely to continue. And guys, I'm only going to do it on 2 charts. I'm not going to add bigger time frames. Hey, good morning, Jose. Guys, I'm not going to add range charts. I'm not going to add minute charts, daily charts, weekly charts. I'm going to keep it on 2 charts, guys, because what I've found is that you can be successful on only 2 charts with only 3 rules if you allow it to be simple. A lot of you spend the early parts of the morning over in the traders chat on Discord, right? The people that have been trading Nexgen for 10 years, for 12 years, for 15 years. There's a lot of veterans over there, guys. And you're going to be kind of lured in by that siren song. Well, John Novak has 7 charts, and Nexgen Ben has 5 charts, and David B is trading 4 charts, and Jose has 5 charts, and there's a range chart that I've never even seen, and I want to do what these guys are doing because I feel like they're successful. Guys, I want to play golf like Tiger Woods. I don't have the skill set to do it, right? I've got to keep it simple. I'm not trying to spin the ball on the green. I'm just happy to find the green. So let your plan be personalized, guys. Let it be your plan. But Gary, Nexgen Ben, can I address this? He has 2 trades, right? He has 2 trades, and he has 8 years on you, on Jose, on me. And Nexgen Ben will tell you that he blew out account after account after account trying to do what everyone else was doing. And it was only when he simplified, right? When he gave himself the highest advantages that he began to find success. He even took time off from the software so that he could kind of take a deep breath and refocus and go back to simplicity. Don't worry about what Nexgen Ben is doing because Nexgen Ben isn't paying your bills. John Novak's not paying your bills. Chris, Mike, Safia, David, Jose, none of them are paying my bills. So I'm going to have my trades, right? I know, and believe me, the potential is there. But the potential is typically reached when you personalize it a little bit, right? Every time I try to trade like my brother, and guys, you don't know this, but my brother and I talk extensively every morning, and we look at patterns, and we look at all these different things. And my brother sent me a pattern this morning, and he goes, hey, study this. And I told him, I said, no, I'm not going to. I have all I need to win, right? And it was kind of funny because I don't need his patterns to be successful, right? I don't need his extra this, extra that. They're great. It's amazing chart reading. But guys, keep it simple. That's just my little thing, my little soapbox for the day. Let's keep it 3 rules and 2 charts and learn how to make money like that and then add. And guys, there are 2 charts. You're going to use a large chart and a small chart. Your large chart is an example of what the large crowd is thinking, guys. And I'm going to show you the picture. I love this picture. Large chart mentality, guys. Large crowd mentality. The large crowd is going to define your direction. It's going to define your area, right? The large crowd is going to give you the overall temperature of the market. And guys, the small crowd, the people that are fighting the group, they're going to give us our entry. So we use a two-chart process. And our large chart, again, direction, momentum, areas, all of these are defined. All of these are defined. So Gary, and that's a great reason, right? Sometimes my brother does stuff and I'm like, oh, you jackass, pardon my French. What are you doing? You're fighting everything. But what he's done is he's put 1,000 hours of research into that trade. He's put 1,000 hours. He has 1,000 pictures. He has a very definite, deliberate, easy to follow plan. And that's how he's catching these trades. That's how Ben's catching these trades, guys. If you have 5 trades, guys, you probably have 20 rules that you're always thinking about, right? If you're chasing a high probability trend trade, you only have 3 rules on 2 charts. It takes all the noise out of the equation, guys. So your large chart, 13.2 for that crude oil and the ES. Direction, momentum, and areas, guys. It's a broad stroke of a brush. It's going to give you the general temperature of the market, the overall opinion of the market. Rule number 1, the advantage of momentum takes place on the 13.2. Rule number 2, the advantage of a clear path takes place on the 13.2. Guys, 2 out of 3 rules on only 1 chart. How amazing, how simple, how easy, right? And then once these rules are true, guys, you're going to go to a small chart. You're going to refine the broad stroke of a brush. You're going to pinpoint with unbelievable accuracy the point where the market is likely to continue. That's going to be your entry. You're going to be able to reduce your risk. You're going to be able to increase your profit. That's rule number 3, is nothing more than entry when the first 2 advantages are present. So guys, I want you to take this into consideration. I don't ever tell anybody how to trade. Let 2 charts and 3 rules be your path. Give it 5 days, 5 trading days, right? 5 trading days, and let me know how you do. He's always, Jerry, he can't sit still. He can't sit still. He's funny. He's like I am. If I'm sitting in a restaurant and the busser has a broken leg and the tables are dirty, I want to get up and help him bust tables. Like, that's my mentality. And the Johns is the same way. He's always looking, always searching. But the reality is, guys, we teach the same thing that we've taught for 20 years, right? It's been the same plan for 20 years, guys. Define a top or a bottom using Fibonacci, and then go ahead and let the triggers roll, right? And look for opportunities. It's been the same plan forever. John has pictures from 2004 of the exact same trades that we teach today because they work. The looks are a little different, but that simplicity works, guys. It's been a recipe for success for as long as we can remember. So we're going to focus today on 3 rules, right? We're going to have strong triggers. We're going to have no termination conditions, and you're going to have an entry at an area inside of favorable large triggers on the 5-1 chart, on that smaller, faster chart. So without further ado, let's take a look. You know what? Before we take a look, I want to do this. I want to remind you guys, there's one reason to trade, right? One reason to trade. Let's use this guy. Everybody wants to make money. So what's the fastest way to becoming a confident trader? Guys, post your trades in class. I say this every day. Post your trades in class. If you're uncomfortable posting your trades in class, maybe you don't know how. Maybe you don't know how to work TechSmith. Let me know. I'll get you taken care of. Maybe you don't want people to go, oh my gosh, and now somebody knows that I took a loser. Guys, I take losers every day. You're going to take losers every day. The key is to put yourself in a position where you take fewer losers than winners, right? I've never met anybody that wins 100% of their trades, ever, in my life. Most people are in that 60 to 50% when they're profitable. If you're not in that 50 to 60%, this first hour is for you, guys. Keep it simple. But post your trades in class. You need feedback. What did you do right? What did you do wrong? What can you do better, right? How can I help you? 15 hours every week, guys. Nexgen is available. I'm available to give you feedback on anything and everything that you do. And also, anything that you have questions on, all you have to do is post a picture, ask a question. I promise to take care of you. And the next thing is using a spreadsheet, guys. Nexgen provides you the spreadsheet. It's in your Nexgen study picks if you're brand new. If you've been around for a while, you probably have a copy. I hope you have a copy of this. Guys, this is your spreadsheet. There is one page where you're going to track everything that you do. You're going to track every trade that you take. This is your trade journal. You're going to put what you did, how you felt, what type of trade was it, what were the conditions, what was the result, right? This is your trade journal, and you're not doing this because you need a chore, because there's something to do in between trades. You're doing this so that you can come back and study it every morning. What worked? Guys, if you can identify a pattern that works, then you can repeat that pattern. You can focus on repeating that pattern in the day. What didn't work, right? For me, it was trading in determination conditions, guys. I love to trade into a brick wall of resistance or support. I don't know why. It made me feel good. Not really. It made me nervous, and I was trading a lot of hope, and I lost a lot of trades doing it. And it wasn't until I started journaling my trades, until I started going back and noticing, traded into a termination, into a termination, into a termination. And there was a lot of red ink going with it that I was like, whoa, I'm going to have to correct this. What felt easy? What kept you relaxed? Guys, everybody in this room, when they take a high probability trend trade, and I ask them, I say, hey, how did you feel during this one? And they always say, man, Mark, I felt calm. I felt good. I was confident. And then when they force a trade, when they break a rule, right? What made you nervous? In that little historical study every day, guys, everyone loves to take pictures. Everyone loves to show me winners. Show me your losers. Show me the ones that don't work so that we can correct that behavior. But get on the habit every day. Take your pictures, put them in your journal, study them the next day. And man, I'll tell you what, if it helps you, hold you accountable, send me an email every morning, marknovak@nexgent3.com. Send me an email and say, hey, Mark, I studied my trades yesterday. Today I'm working on this, and I'll hold you accountable every day. So going back to those three, here we go. So you're going to post your trades in the spreadsheet, guys. You're also going to take your favorite looks tab, and every time your rules are met, take a picture. Start burning that picture into your brain of what it looks like to take a rules-based trade. We're going to learn the trigger lines together, you and I. Guys, it's just the two of us. You think you're in a classroom. It's just the two of us. Jerry, it's only us in this room. Ask me everything that you want to ask. Gary, it's only the two of us in this room. Ron, all you got to do is just, boom, it's your place. It's a private session every time you ask a question. So we're going to learn the rules together, guys. When is it okay to trade? When are the rules met? When are the advantages present? Your job is going to be to simulate. Your job is going to be to practice these rules and keep taking them and keep presenting in class until you're always taking the correct rules, right? Until you're sure about them. You're confident, you're comfortable, you're confident. Don't practice the wrong trades, guys, and simplify. Simplify has been part of the plan for as long as I can remember. Get good at one thing before adding a second, right? Master one and then add a second. You have to commit and you have to learn these so that they become easy. Your spreadsheet, guys, I'm telling you, I've got 200 plus pictures of rules-based entries here. I'm going to put this spreadsheet in the room for you right now. Take my spreadsheet. All I want is for you to be successful. Study them. If you've never gone from start to finish and clicked every one of these links, why not? Why not burn that image in your mind? Go back, use market replay, replay the day. Fix your mistakes. Skip the trades you shouldn't have taken. Take the trades that you should have taken. Guys, market replay will let you double your reps every day. You get 2 days of knowledge in one day, guys, which means that in a year, you're getting 2 years experience, right? The idea on market replay isn't to show off, hey, look, I memorized the market and now I can make a whole bunch of money on simulator. The idea for market replay is to show you the potential of your plan, right, of your rules, because you can pause market replay and you can look at a checklist and you can make sure that you're following your rules. And then you can see, well, how do I do when my rules are met? Guys, I've had people do it on the high probability trend trade. One gentleman did it over the course of a year. He just ran it through simulator with the parameters, and I think he was 83% profitable. Take pictures of the correct trades, guys. You should be taking a minimum of 15 pictures a day. If you're brand new, a minimum of 15 pictures a day, guys. That's about 300 pictures a month. It's 900 pictures after 90 days of study. If your picture count isn't going through the roof, again, you're doing yourself a disservice. Repeat this process every day. Hey, good morning, Bobby T. Until you always take the correct trades. Because if you're always taking the correct trades, then you're taking the trades that have been proven to win more than they lose, right? Aren't you guaranteeing yourself that you can win? And that's when you start entertaining the idea of live money, right? Of trading one of those prop firms, passing their tests. So guys, this is your path. It is time tested. It is proven. It has been verified. It's up to you whether or not you choose to embrace it. I would encourage you to embrace it, embrace the simplicity, and let's go see how easy it can be, right? I'm going to go back to the tutorial section, and we're going to go to the T3 trigger lines defined, guys. When we look at these T3 trigger lines, the first thing that they're going to tell you is what direction the market's going. Here's your first advantage as you get into day trading. If the background on your 13.2 on your large chart is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. Guys, simply trading with the trend eliminates a lot of mistakes, right? Embrace it. It's difficult sometimes because you're going to form an opinion. Just trade with the trend. Life gets easier. The next thing those trigger lines do for you guys is they're going to define momentum. They're going to make sure that rule number one is met. When your small trigger lines are crossed up, they're above the large trigger lines, and both trigger lines are wide and angled in the direction of the trend. Wide and angled in the direction of the trend. I'm typing because that's a big deal. If your large triggers aren't wide and angled in the direction of the trend, you can't have this momentum, that rule number one met, guys. It's the space created between the two. It's that angle of the triggers that lets you know that the odds are favorable for the market to continue in the direction of the trend. Guys, this is what we call that momentum phase. When momentum is its highest, odds favorable momentum is a phrase that you're going to hear in class quite a bit, guys. Did you have odds favorable momentum? Did you have that advantage of momentum? In a downtrend, it's the same look. It's the space between the small and the large, both rocketing in the direction of the trend. Guys, this is your best look. This is your odds favorable momentum. This is rule number one defined. And when rule number one is in place, guys, this is the most favorable look for buying a pullback to Fibonacci support, to Fibonacci resistance. It's this look that's going to get you set up for going to that smaller chart looking for a potential entry. And guys, on your 13.2, you're going to see these tails. If you scroll backwards, historical, these tails are potential entries on a 5-1 chart. So pretty simple look, right? Guys, if you're brand new, if you're focusing on consistency, if it's time to get your poop in a group and start winning more than you lose, give me a Y in the room if you're comfortable. Odds favorable momentum gets the ball rolling, guys. This is the advantage that starts the process of looking for a trade. Because when those small trigger lines work their way inside of the large trigger lines, we call this a weakening of the large trigger lines. One is strong, one is weak. One is odds favorable. Weak means anything can happen. I like it. Chadwick, it's easier to group poop when you keep it simple. It's one of my favorite phrases. I have no idea where it came from, but it paints a picture, doesn't it? Guys, weak trigger lines, anything can happen up or down. You've given away that advantage of momentum. And remember, in order to have a trade, momentum must be present, right? So one of the things that you're going to recognize is that odds favorable momentum doesn't happen every second of every day, guys. There's a patience piece. 90% of what you do during the day will be reading your charts, waiting for those advantages. 10% of what you're doing is going to be taking trades because those advantages are present, guys. And this is about, oh gosh, I don't know, maybe a 12-hour span. It looks like it's going to be crude oil, and most of it's through the overnight. There's your midnight right there. But you go from odds favorable to anything can happen. And when you have that anything can happen, the market reverses, guys. I took out Fibonacci. I took out indicators. We're only looking at trigger lines. You end up with odds favorable momentum. There's one of those tails, a potential entry. The market continues up until you get anything can happen triggers, and then there's your reversal once again. Looking for odds favorable. And then there's indecision. You're going to find times. Guys, remember we saw this yesterday if you were in class? The large were down, but the small were up, or the small were down, but the background was green. And your trigger lines were giving zero help. There was no momentum present. Guys, this is a transition. This is when the forces that are fighting. Buyers and sellers are duking it out for supremacy right here. There's no agreement. There's no odds favorable momentum. This is where you're going to be tempted to predict what the market will do rather than wait for rule number one. Guys, have you ever been chewed up in chop? Doesn't ever have to happen again. Wait for that odds favorable momentum. Wait for that advantage, and it's going to get you where you need to be. So that's rule number one, guys. We're trading with the trend, right? Trading with the advantage of momentum. And now on the large chart, we have to make sure that termination conditions are false, guys, that we have room to a profit target. Let's go back to the manual. Let's get out of the trigger lines, and let's go to tops and bottoms. How do I know when the market may reverse? How do I know when price may react to Fibonacci and make it disadvantageous? Well, what is a termination condition? It's a Fibonacci-based indicator that may reverse the market. It's not guaranteed to reverse the market, guys, but what it does is when one of these potential termination conditions are present, it takes away your advantage of a clear path. What are the areas? The areas can be a divergence high or a divergence low. You identify those as a magenta line from a high, a cyan line from a low, pink or blue if you're not artistically inclined. It can be red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones. Guys, these are your areas, and if you're brand new, this is your roadmap for what you're looking at on a chart when you open up the software. In order to determine whether or not these areas are likely to stop the market or may reverse the market, it's a simple process. It's a two-part process, guys. I encourage people to write this down and really embrace this recipe for termination conditions. The first thing that has to happen is price reaches an area. These dynamic Renko bars, you can see that the trend is down, the background is red. The market's trending down, and price reaches an area. When price reaches an area, all you have to do is ask yourself, where are the T3 trigger lines? If they remain above support, price reaches support, T3 trigger lines remain above. This is an area that may reverse the market, guys. This is what we call a termination condition. And this termination condition can create a bounce that'll pull you out of a position. It may completely reverse the market. But what it means is that you no longer have a clear path. So two-part process. Price reaches an area. If no trigger lines break through, you're at a termination condition, right? No more trend trades into that area. So termination conditions from a high. Price reaches the divergence high. Guys, when divergence prints, it's not a termination condition. It's a loss of momentum. But when price reaches the area, the trigger lines remain below, textbook termination condition. No more long trades because the market may reverse. Price reaches resistance, all of your trigger lines remain below. This is an area that may reverse the market, may create a large bounce. Here price reaches these yellow one-to-ones and resistance, and all of your trigger lines remain below. No more long trades. It may create a bounce, guys. This is termination conditions is at a high. This is how you identify when that clear path is no longer present. I'm going to give you the same picture from lows. Guys, repetition creates ease of recognition. Price reaches one-to-ones. Price reaches an area. All the trigger lines remain above. This is a termination condition, guys. This is an area that may reverse the market. No more short trades. Price reaches support. All of the trigger lines remain above. No more short trades. Price creates a pivot with a divergence line. Loss of momentum. It's only a pivot, but when price reaches that cyan line, now it's a termination condition. Now it's an area that may reverse the market. So guys, here's your pictures. Put them in your spreadsheet. Termination highs, termination lows, not a clear path. Is everybody comfortable with that recipe? We've identified when areas may reverse the market. Two parts, right? Price reaches, triggers don't break, we no longer have a clear path. So when is an area broken? Let's go back to it. I use a lot of pictures, guys, because I think pictures visually help. When is an area broken? An area is broken when both the small and the large triggers break through the area. And this is your synopsis for the two options for a brand new user looking for a high probability trend trade. Price reaches the area, no triggers go through. It's not broken, no clear path. Small and large triggers go through resistance. Resistance begins to act as support. Now the path is broken. There's one of those tails for a potential entry. So when price goes a little bit beyond the fibs, so David, that's a great question. And this is where I encourage you to embrace. If price reaches, and this is a good example of it, and let's use it. Price reaches the fib right here, right? So price reaches. If the trigger lines remain below, it's a termination condition. Even if price goes a little bit through and the trigger lines remain below, it's a termination condition. The next bar is working its way through. The trigger lines are still below. So we're going to use the trigger lines, right? But the first thing that happens is price reaches it. And let's go to the live market and see if we can find an example. Here we had a tick or two above, right? But do you see how the trigger lines remain so far below? Textbook termination. It did it again, but textbook termination. And if you scroll back, you're going to see it over and over. Price may exceed a couple ticks. That's okay. If the trigger lines stay above or below the area, it's just not a clear path. Does that help a little bit, David? It's really embracing that idea that until the trigger lines break, not worried about price. The only thing we're using price for is to activate our brains to look and see where the trigger lines are. And guys, I wrote on here too, what if you insisted on a clear path? Would it make your trading more profitable? Only you can answer that question. So no triggers, no trade. Rule number 2, no clear path. Small and large triggers break. We now have a clear path, guys. As a brand new high probability trend trade trader, those should be your only two options, right? We're looking for a trade where every indicator on every chart agrees for a trade. I realize that's not realistic. You guys got to be busy. So I'm going to talk about another look that happens on the 13-2. And it's going to set you up for what we call a medium probability trade. And a medium probability trade means that most of your indicators line up for the trade. However, a small issue exists. This first medium probability trade that we're introducing is going to be, your small issue will be a path that is not clear. This is ultimately, for most of you guys, going to be the vast majority of your trades. But when you're executing medium probability trades, you have to take them and manage them assertively. If there's trouble in your way, you have to identify it, maybe take a portion of your profits there, get to zero loss, as soon as possible. Guys, medium probability trades aren't going to put you in that 70 to 80% win category, right? So you have to determine, do I want to add a trade? Hey, good morning, John. Do I want to add a trade that isn't guaranteed to win more than it loses? Nothing's guaranteed to win more than it loses, but hasn't been back tested to win more than it loses. If you want to add that to your plan, guys, your first look that gets you there is, hey, good morning, Debbie, is what we call a 50-50 look. And I always introduce this in the morning part of the classroom because a lot of you guys are taking this trade. And it really is my sincere desire that you take it with the absolute best scenario to have it taken, guys. So 50-50 means 50% of your trigger lines are above the area that we're wanting to break. 50% are below the area that we want to break, or conversely, small triggers are below, large triggers are above. So you could call this a straddle trade. You could call this a one above, one below trade. It really doesn't matter what you call it. 50-50 has nothing to do with your chances of success. It's just easier to type, right? 50-50. It means that this area has the potential to break, but it hasn't broken yet. It's not a clear path. What are some very key elements that should be in position if you're going to try a 50-50 trade, guys? You have to have odds favorable momentum. If you don't have odds favorable momentum, what on earth is going to push the market through that potential area to break? The other thing, let it be one area. So often I see new users trying to take a trade on an area with the potential to break, but they've stacked 3, 4, 5 areas that they're hoping breaks. Guys, let it be one. Let it be odds favorable. And even more so, let it come from a termination condition. When you're looking for those 50-50 trades, let it come from an area that stopped and reversed the market. Not only are these termination conditions fantastic anchors, when you have a termination condition that reverses the market, it's a strong top or bottom. It becomes a great anchor for a 50-50 trade. It becomes a great anchor for that highest probability trend trade, allowing, and I'm going to find it. I've got a picture here. Making sure that they're coming from a termination condition that creates a full reversal, guys. This is what we call a strong top. This is what we call a strong bottom. When the market reverses completely, large triggers go from green to red, you end up with that odds favorable momentum, and it's coming from a textbook no triggers through termination condition. These are good tops or bottoms. This is your anchor. This is your best of the best. Use this to help you identify your highest probability trade. Use this to help you identify your best chances of success on a 50-50 trade. So guys, these are your options. No triggers, no clear path. Both triggers, you have a clear path. One trigger, it has the potential to break, therefore it's not a clear path. Everybody comfortable with that? There's only one other termination condition that I want to talk about. And then we're going to get into entries, guys, because entries are where the magic happens, right? So there will be a time when you have a clear path. There will be a time when you have odds favorable momentum. But the market seemingly turns from nowhere, right? The path is clear, everything says down, and that market goes up. The path is clear, the odds favorable momentum is present, but that market seemingly turns on a dime. Guys, you're going to see this look, and then you're going to be able to identify that change using your smaller, faster chart. And this is the only termination condition that I'll use on a smaller chart, guys. The only termination, the only time I'm going to look for a market that may reverse on a smaller, faster chart, because that smaller, faster chart shows change quickly. And 3 divergences in the same price range may terminate the trend. Divergence is a loss of momentum. That's all it is. It's an equation that's calculated in the background. A lot of smart stuff that I don't understand. But what I do know is that divergence is a loss of momentum. And when the market loses momentum 3 times in the same price range, it may terminate a trend. It becomes even more powerful when my small triggers end up inside of my large triggers. Guys, you remember that as an anything can happen look, as a weakened trigger look. It's a visual loss of momentum. 3 divergences is a visual loss of momentum. Becomes more powerful still when that third pivot is higher than the previous, showing me that price couldn't exceed the previous and I'm losing momentum. Guys, you're going to see this look from a low or this look from a high when the market is doing that. When you have that clear path, maybe even odds favorable momentum, it's going to help you identify those turns a little bit faster. And it's going to not only keep you from taking trades when the trend may terminate, but if you're in a trade, you'll be able to use this for management. You'll be able to recognize this loss of momentum and really stop hoping that the market goes, identify it, get to break even, get to zero loss level, maybe take profits quick. This one right here is a 5-1, David. But it happens on every chart. You're going to see this on a 5-1, an 8-2, a 13-2, a 21-3, a 34-5. You'll see it on range charts. But you're going to see it first on the 5-1. But even my next picture is the exact same phenomenon. And this is on a large chart. This is on a 13-2 chart. 3 divergences in the same location on a larger chart. You can usually expect larger moves after those termination conditions. And when it happens on that big time frame, and when it happens around Fibonacci, it becomes very, very powerful. But in this case, we're using it to see the change before it happens on that large chart. You'll recognize it. And guys, the only termination condition that I recognize and respect on the 5-1 are those 3 divergences. 1 divergence doesn't scare me. 2 divergences gets my guard up. 3 divergences, I'm exiting a trade. But we're looking for areas, right? We're looking for those areas on the higher time frame. And guys, those are your termination conditions. That's your clear path. When you have momentum, when you have a clear path, it's time to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And you know what? I've got new pictures for you guys. We're going to use a limit order to buy or sell a pullback inside of favorable large triggers. When the rules are met on the 13-2, when the momentum is strong, when the path is clear, this is your look on the 13-2. On your 5-1, it's going to be very similar. You want strong triggers on the 5-1, right? And you're going to anticipate a pullback. Because the pullback's how we're going to enter the market. When the large crowd says we're going up, when the large crowd says that there's nothing in the way, the large crowd says we're in an uptrend, guys, we're going to let the small crowd fight them. And thank goodness that they do, because when the small crowd fights, you guys get the best possible entries. You'll recognize the beginning of a pullback with a reversal bar on the 5-1. So you're going to define your trigger line conditions in your entry areas. Your trigger lines on the 5-1 should be favorable. Favorable large triggers, guys, that's the catchphrase. It means that both your large and your synthetic are wide and angled in the direction of the trend. Your large triggers, the smooth triggers, are native to the 5-1, guys. That's just a large trigger momentum indicator. Small's outside of the large. Everything says go the same way it does on the 13-2. Your synthetic triggers are the large triggers from the 13-2. And guys, you can't have odds favorable momentum without these trigger lines strong in the direction of the trend, right? So favorable large triggers mean that both the large and the synthetics are strong. They're angled in the direction of the trend. They're overlapping one another. And this is going to create the tightest window of opportunity, guys. And when that reversal bar happens, all you have to do is identify the areas that are falling inside of those favorable large triggers. There's 3 lines that we'll take a trade from, guys. We'll take them from fibs, we'll take it from mid bands, and we'll take it from yellow 1-to-1s, or any combination of the 3. Fibs and mid bands, maybe one on top of the other, right? 1-to-1s and fibs, maybe one on top of the other, or it may be a little spread out. But when this reversal bar happens, I put my limit order. I wait for the market to come back right at the top of that window. And if it does, if it comes to that area inside of favorable large triggers, I'm in a trade, guys. I'm in a trade with the advantage of momentum. I'm in a trade with the advantage of a clear path. I'm in a trade with the advantage of having entered at the area where the market is most likely to continue. This is my highest probability trend trade, guys. This is your path to success as a brand new user. My initial stop goes outside of the window of opportunity, outside of that area where the market shouldn't continue. And if it does, I no longer want to be in the trade. And I'm going to show you guys the easiest way to create your window. Do this with a drawing tool in the beginning. You'll be able to do it in your head soon after. But take a shape tool and go from the highest point of the triggers to the lowest point of the triggers. And then take another shape and go from your highest point of support to your lowest point of support. Guys, this is your window of opportunity. This is where the market is likely to continue. Your initial stop is right here, where the market shouldn't go, right? Just above, but I didn't want to cloud it. Outside of that window of opportunity, below the lowest point of support, below the large triggers. But this is your trade. With all of those advantages, once the market, you'll notice that it went almost to the lowest point. Once the market moves in the direction of the trade, I can adjust my stop, right? The 13.2 said strong triggers. The 13.2 said clear path. As your trade progresses, you're going to watch the momentum and the trigger lines to stay in a trade. And if they're both still up, if the 13.2 still says go, you have the opportunity to take bigger targets. If it changes, maybe you get multiple divergences, maybe you get weak triggers, right? You can manage your trade. Right now, the only goal that I have for you as a brand new user is to be able to take this entry at the area inside of favorable large triggers. And do you see how after the fact, there's one of those tails? And that tail lines up with the support inside of favorable large triggers, guys. This is a trade that typically wins 70 to 80% of the time. You'll be able to use Fibonacci to understand where the market is likely to go and create intelligent targets. You'll be able to use momentum to determine whether or not it's likely to get there. But by using that smaller, faster chart to get into the trade, you're going to be able to reduce risk. You're going to be able to maximize your profit potential. And guys, it's a simple process. 3 rules happening on only 2 charts. All you need to do is get comfortable with the look. You can go back historically and you can study this look. Go back on your 13.2 or your large chart, and every time the rules are met, circle a tail. If that tail lines up, that circle lines up with support or resistance inside of favorable large triggers, you have a high probability trend trade. Let's see if here's a good example from John Novak. Odds favorable momentum. Everything says down. There's your pullback directly to resistance inside of favorable large triggers. How easy is that? Guys, your job is to take that picture, post it in class, and say, hey, Mark, did I follow my rules? It's your job to post it into your spreadsheet so you can look at it tomorrow. Win, lose, or draw. And then finally, you want to take that best entry look, because all we're focusing on is entries. Get it into that spreadsheet. Because no matter what happens, win, lose, or draw, guys, that was a rules-based trade. Odds favorable, clear path. Directly to the window of opportunity, guys. This is the one that typically wins more than it loses. Are there any questions about a high probability trend trade? Are there any questions about using a spreadsheet? Any questions? But the top wasn't great. You're absolutely right, David S. So let's do this. And David, I'm glad that you said that, because your highest chance of success, let's see if we can make this bigger. Your highest chance of success comes from a good top or bottom, a termination condition that creates a full reversal. There's a video attached to this checklist. Note, you can trade a good top, good bottom, managed tightly if divergence is true. Odds favorable. So, David, that sets it off, right? That's your best of the best. Your best of the best comes from that termination condition, from that strong top or bottom. But remember, we're talking, let's look for entries, right? Let's take 20 days and let's focus on entries. And that's what I want you guys to pay attention to on this one. The equation works, right? Strong triggers, everything down, there's your entry. And we're not going through anything other than, did he get that entry at an area inside of favorable large triggers? Without question, he did. That should be your focus for the first 20 days. And then if you use this spreadsheet or this checklist, let me put a copy in the room for you. David, your highest chance of success comes from a good top or bottom, right? Your highest chance of success comes from odds favorable momentum, from no termination conditions, from an area inside of favorable large triggers. And once you figure out your entries, there's a couple other things to figure out. So let's break down this trade. It's not coming from a good top or bottom, right? So it may be a little less likely to hit that 70 to 80%. It's also a 50-50 trade. Smalls are through, large are not, which means that this path isn't broken. So once again, that's two things. We don't have a clear path. We don't have a strong top. And if I go to my checklist, at that point, I understand that I'm forfeiting advantages. Does that make sense, guys? And now I have a loss of momentum. I'm forfeiting a little momentum, I'm forfeiting a clear path, and I'm not coming from a strong top or bottom. Guys, if you're a brand new user, this probably is not your trade. If you wrote the software, you'll be able to use your chart reading, looking at advantages and determining whether or not this is a trade that you want to take. This one doesn't fit my rules personally. And I'm not sure what happened after. And David, I like it. Does your plan say don't take it if it's not from a good top or bottom and it's 50-50? I think that's a wonderful plan. You know what my plan says? One area broken, I need it from a good top or bottom, and I need it without divergence. It's not my trade. Doesn't mean it's not a trade. It's not mine. And that's that personalization part, right? Hey, Paul, one thing that helps me, and I'm not sure if you do this one. I'm not even sure that it's in the instructions. When you go to workspaces, if you're having trouble with them crashing over and over and over again, deleting recovery is great. Deleting the workspaces file as well tends to help. If you haven't done that one, let me know. I'm not sure if that one's in the instructions or not. You don't have a recovery folder sometimes. Do you have the workspaces file? Lose that one, see if it helps. Cool. Fingers crossed. So David S., great job. Great job following your rules, guys. This is a checklist to keep you guys focused on the best of the best, guys. The highest probability trend trade. That's your best chance of success as a brand new user. So let me ask you, if this is a trade that typically wins 70 to 80% of the time, why is it not the core of what you're doing? It should be. It should be the core of everything that you're doing. It has all the advantages in place. Guys, this trade had potential, right? It may or may not be your trade. Just because John Novak takes this trade doesn't mean that you need to take the trade. And I think that's what I'm trying to really instill in you guys today, is that let it be yours, guys. Use the phrase, my trade is. I gave you the checklist. Let that be your trade. I'm also going to give you a checklist where I stole pictures directly from the resource materials. What does it look like from a good top or bottom? What does it look like to have odds favorable momentum? Guys, you have to study this so that it can become easy. Put it into your spreadsheet. Use it over and over. Post it in the room, and we'll talk about it. But guys, every time you post in the room, I need you to annotate your charts. Tell me why you did what you did. Show me your rules. Identify momentum. No termination conditions. If you're taking a trade that isn't the high probability trend trade, tell me why you're taking the trade, guys, so we can talk about it. It doesn't matter to me what kind of trades you guys take. I'm just trying to instill in you that if you have a solid foundation that's been proven to win more than it loses, it makes sense to become successful and then expand rather than expanding before you find success or mastery with only one thing. So there's a couple checklists for you. And here's kind of a real simple trading plan. It's the same checklist. It incorporates a little bit of stop logic. If you incorporate more charts, it helps you get on the path to which one. It's a little more advanced. Talks about 50-50s without a good top or bottom, daily goals, max risk. Guys, this was put together. You need to write your own. Write a plan, what you're going to go after, what you're going to trade, what you're looking for. And ultimately, you're looking to have those advantages. So guys, here's that same trade. And I want you to see this. There's that same entry that John Novak took. He got in at 72 and the market went all the way down to 60, guys. That's $120 worth of profit, right? Until he gets a higher divergence with weak triggers and he says, well, this may push up. On a 50-50 trade without a clear path, I'm giving away the advantages of momentum. Guys, I guarantee you he probably took a little bit of money on this trade, but it has to be managed assertively because it's 50-50. What are we noticing, guys? 50-50, flat triggers, didn't break out. Guys, crude's trying to do what crude does, and until they figure it out, until they get their, we'll go back to poop in a group, you don't really have rules met. It keeps you out of the chop. Any questions? Quiet class today, right? Termination conditions. Textbook termination, no triggers through. Smalls try to break, but it's not odds favorable momentum, right? Not a good look for a 50-50. And then you add into that mix multiple divergences. And look at that. There's a third divergence with a higher pivot straight out of the textbook. And that market rockets all the way back up to Fibonacci resistance. Absolutely no trigger lines break through. Textbook termination, small chart termination. Guys, you're in a holding pattern. You're in a sit on my hands and not do a darn thing because the advantages aren't present to give me a trade. Does that make sense? This classroom is very much leading horses to water, guys. It's up to you to drink. It's up to you to do the study. It's up to you to post the pictures, to ask the questions, to track your trades, to learn the rules. We just talked about the rules. If you're unclear about a rule, it's your job to ask. Be active in your education, guys. That's our first hour. That's what we talk about in the first hour. This is the first hour every day, guys. This is where I ask you repeatedly. Keep it simple. Let it be simple. Let it be easy. Let it be focused, right? Let it revolve around advantages. If you give up one advantage, you've gone into medium probability trend trade, right? And if you've gone into medium probability, there's absolutely no reason to forfeit other advantages. How many things are you willing to give up and still take a trade? Here's one of those 50-50 trades. I like to share this. I have odds favorable momentum and I have an area with the potential to break, but because it hasn't, it is not a clear path. If I'm giving up the advantage of a clear path, right? One of three have gone away, then my money's worth a perfect entry on the 5-1. Guys, 50-50 trades are the most lost trades in this classroom because you forfeit momentum, because you forfeit a small window of opportunity. Guys, no divergence, strong triggers, small window. That's your best look for an entry on the 50-50. Until you're winning more of these than you lose, why are you giving up more advantages? There's another look in a long 50-50. No divergence, strong triggers, tiny window of opportunity. Take a shot. You might get run over, but if you're gonna forfeit a clear path, guys, don't forfeit anything else. Or do. It's up to you. I don't tell you what to do, but I can certainly tell you how to do it better. All I need from you is a picture. All I need from you is a post. Annotate your chart, and let's do what we do. Guys, the S&P is trying to work it out. Crude oil is trying to work it out. There's a tremendous amount of indecision, guys. The buyers and the sellers are fighting. And you'll notice that there hasn't been a clear path. If I squeeze it, what does that look like to you guys? The market can't seem to go up, but it can't seem to go down. Looks like consolidation, right? If your rules aren't met, you didn't get chewed up in consolidation. It's a slap fight. And it is. They're trying, right? They're trying to make decisions. Guys, you don't have to predict. You don't have to be first. Sit on your hands, wait for advantages. Guys, trading is the loneliest sport there is, right? It's a single person game. There is no we. It's only you. And if you keep it simple, either my rules are met. Whoops, wrong picture. Either my rules are met or my rules aren't met. And my rules have been proven to win more than they lose. Sometimes it means you're going to sit still for what? For an hour, for 2 hours. And there's your magic 8-ball, right? Do your rules provide advantages that create a high probability trend trade that's been back tested and proven to win more than it loses? As I see it, yes. Embrace it. Wait for it. You're worth it, guys. Your money's worth it. I'm going to take 5 minutes. I'll let you guys watch crude oil. Let's see if they figure it out. The S&P is such a test of patience. How much does it cost to not be in a trade, though? Costs nothing, right? What's it cost to be in the wrong trade? It can cost money, right? It can cost confidence. It can create frustration, anger, anxiety. Oh my gosh, there's the word, right? I don't know about you guys, my palms get sweaty when I break my rules. I break my rules. You're going to break your rules. Sometimes you're going to get lucky. Most of the time you're not. That's where that anxiety comes from. Guys, I'm going to go run a lap, stretch my legs, take a deep breath. I would encourage you to do the same. Nobody needs to sit in front of a monitor for 8 hours straight. Get up and take a lap. I'll be back in about 5 minutes. We'll get into that second hour. We're going to look at the pictures that you guys posted. There's your breakout. And we'll look for rules to be met in the live market. We'll also look for rules not to be met in the live market. Right now, what I see is I don't have my best momentum, right? But I do have a clear path, and I do have an area inside of favorable large triggers, and I haven't sacrificed any other advantages beyond the clear path just yet. Medium probability, isn't it? It's not high because I don't have the advantage of momentum, but I do have a clear path and I have a window. Not a high probability trend trade. Medium at best, would have to be managed assertively. Guys, I'll be back in a few minutes. Post your pictures if you got them. All right, guys, here we go. Second hour. So what I'm going to do for the second hour is first I'm going to talk about what I see in the market. I see weaker triggers, right? I don't see the gap between the small and the large, which means that I don't have my highest momentum phase, right? I see a loss of momentum on a 50-50 trade. Smalls have broken, large have not. I don't have a clear path. I also have two losses of momentum on my 5-1. I also have the mid bands outside of the large triggers, right? Guys, do you see how when you give away advantages, that market may do things that aren't advantageous? How many of you, and guys, one of the most common things is being bored and waiting, right? Oh, I'm so bored, I just want the long. No, we didn't. All right, Diamond David, help me understand the trade that John took this morning on gold. Watching your chart, set up like John's. The rules to me would say you have to have red down arrow on the 13.2 and then a retracement if you look at John's 8 range. Big magenta down arrow, he took the short. I would have, but the 13.2 didn't confirm. The background was green, no magenta down. When it did, it dropped like a rock. What's the rule or thought to have taken? And then David, there you go. He said, there's your answer. And guys, this is where I tell you, gosh, don't try to do what other people are doing. And John's coming in. There you go. There's your answer, Diamond Dave. Chart reading, not a trade. And that's it. Yeah. So this was study. John and I talked about this privately too. This is just study. Terminations coming together. He's looking for patterns. Once again, chart reading. That was the one that he told me. Hey, you should study this look, Mark. And I said, nope. I've got looks that win more than they lose. That's what I'm going to do. So guys, yeah, it was pretty cool. And guys, we do that. Constant state of chart reading. Always looking. And it's fun to do that. It's fun to look at the market even when you're not trading and begin to recognize patterns because that chart reading helps. Yep. And I appreciate that, John. So guys, I'm going to scroll to the top and we're going to take a look and see what you guys have been doing today. Gary got us going. We're going to take a look at Gary's charts. This is crude oil. He's got a large chart. He's got a 13.2 chart. And he's got a 5-1. And this is just a great example, Gary. Nice picture of the gap theory in place. What is the gap theory, guys? The gap theory states that when price accelerates away from the large triggers to a Fibonacci area and the large triggers remain a full bar away, identifiable by the large triggers below that reversal bar marker, price is likely to come back and close the gap. Gary just took a picture of it. And once again, guys, this isn't a trade. This is simply a picture recognizing what's going on. And then Gary recognizing that channel, that breakout, saying, man, that clear path is going away. And then 34.5 termination condition, 13.2 termination condition. I'm trying to see where your entry came. 14.75, 25, 75, 25. Gary, you took the short when every chart said down to get down to that area. It's a nice NASDAQ trade. And then there's a termination, and there's a termination, and there's a termination. And Gary, you call this an edge trade. One thing I would call this is a counter trend trade, right? It's against strong triggers. It's against the trend. This would be a, man, I sure hope that that edge holds trade. You would need an even higher time frame with odds favorable momentum and a clear path suggesting that that area was likely to hold. Does that make sense? Yeah. Yeah, but just for the sake of what we're calling it, right? It is an edge, but without some support on a higher time frame, it's just it's more of a hope. It's a good picture because you can see how they all come together, right? And that 21 chart could set the tone for a beautiful short right there. Great pictures, Gary. Thank you for sharing them. Guys, I like it if you notice. Every picture doesn't have to be a trade. Sometimes it's just a chart read. Sometimes it's just going, hey, this is what I see. This is what it means to me, right? Crude oil is in the bouncy house. I love it. And it is, isn't it? Trying to figure it out. Trying to figure out what it's going to do. And then Ron. And guys, I like this trade. When the path is clear and the momentum is at its absolute highest, quick entry, quick exit, in and out, right? Let the 13-2 lead the way. Let the 13-2 say that the path is clear, that the momentum is there. Looking for a simple entry on the 5-1 and that opportunity. Not a high probability trend trade, but I'll tell you what, 100 out of 100 look just like that. It is a plan based on repetition and study. And then Rob K, let's see what you got, my friend. Momentum is slowing, but still positive. I don't know what positive momentum is. Does that mean up? I hope so. Right? The small triggers have worked their way inside of the large, meaning that we're going into that anything can happen trigger. So if we look at the recipe, right? If we're looking at that simple recipe, we've lost the first part of the equation. That's okay. You do have a clear path, and you do have an area inside of favorable large triggers. So without that momentum, look at this entry, guys, like a sniper. Picture perfect. 2 out of 3, medium probability trade must be managed assertively. Quick profits, quick exit, because he knows the momentum is gone. Rob K, this is a beautiful trade with awesome execution. You only forfeited one of the 3, and then you managed assertively because it was a medium probability trade. I think this was really well done. Nice execution, embracing the clear path and the small window of opportunity, and not hoping for a home run when that momentum visually was going away. Nice job. And guys, remember, if you have a question about anybody's charts, feel free to ask. Anything can happen triggers the exact same trade, right? Anything can happen. Perfect entry, manageable trade. And then I would agree. You held your position too long. Probably should have gotten out of there. And then Jose, this is just a window of opportunity thing, right? You could have had about 4 ticks of risk on that one. Stop behind the reversal bar. And then that lower divergence and weak triggers. No reason to give it all back. Great entry, though. Recognizing that there were challenges, these are the ones to manage assertively. Nice job, Jose. But guys, this kind of supports my coffee mug motto that I like. Great entries create manageable trades. Great entries give you the opportunity to make money and then get out when things aren't great anymore. Ron, once again. Ron trading termination conditions here. This one's a little different. Everything says up directly into a termination condition from a bad product. Midband's too close to the large triggers. That's a little aggressive for you, Ron. Variety equals spice. I like it. So guys, when I say Ron's trades 99% the same, this is that 1%. It's nice execution. Spicy crabs did it to you? You're so lucky. Spicy crabs sound good. All right, Jose. Smaller above the large, right? Man, there's that flat. There's that flat. We saw this one yesterday too, didn't we? Guys, when those large triggers are flat and lifeless, there is no momentum, right? If we go back to what is odds favorable momentum, let it be this simple. Guys, that's odds favorable. Wide angled in the direction of the trend. Wide angled in the direction of the trend, guys. This is your best of the best. When those large triggers find themselves flat and lifeless, look at how there's nothing happening even on your small chart. Guys, there's no momentum here. So, Jose, I hope that helps. We saw the same look yesterday. Right? You've got it on your 21.3 as well. You're in a downtrend on your 13 range. Small's on the wrong side. There's so much information suggesting, and you're trading against divergence on the wrong side of everything. Guys, boredom is a killer. Wanting to be in a trade instead of wanting to be in the right trade can create problems. Coming through. Gary, let's see what you got. Gary, you didn't take the pullback because of the termination condition. I like it. Nice job following rules. That's hard to do when we've been bored, right? I've been bored for an hour and a half. All right, Mike M. Mike, let's see. This is gold. Lower divergence, everything's down. Good momentum, right? Everything's down. I can't tell what time frames you're on here. There's your pullback. You get it in the triggers instead of the mid band, but every chart agrees, Mike. Everything says down, right? Your path isn't actually your path is clear. Your path is clear. It all says down. Path is clear. It all says down. Your area wasn't inside of favorable large triggers, but you had every advantage. I like it. And then, yeah, you're right at what is the potential beginning. The smalls are outside. It's not the strongest momentum phase, but they are outside, and that's a good look. So, good stuff. Great trade. I think the most important thing to recognize on this one is all charts agree, right? All of your triggers are going the same direction. All of your charts are down. Your path is clear. I like this trade. The only thing that I may nitpick you on, Mike, just so you can keep more in the bank, is when every chart hits a termination condition, right? Every chart hits a blue fib and the triggers are weak. Triggers are weak. When that divergence prints, it's all right. Take an exit, right? Money, money, money. Guys, these fibs are money. You can identify where the market's likely to go based on strength. Great trade, Mike. And then Ron, let's see what you did. There we go. Ron's back. Odds favorable, clear path, strong triggers, base hit. That's 3 base hits so far. You're up to a triple. And then John reminding you, if he takes a trade, he'll show you on there. You'll see the marks where he gets in. If it's not a trade, you have to consider it to just be reading. And then what did he put here? Large chart must be strong. Oh, there you go. There's that edge trade, Gary. You're done with IRL for the day. And guys, for those of you that need to add stuff, guys, this is the edge trade. So Gary, there's that same look that you had, I think, but it's led by the strongest there. I like this picture, guys, and this is an easy one to mess up. People forget. Yeah, I like this one. Thank you, John. And then Safia. It sounded threatening. Whoops. All right, Safia, let's see what you did. Oops, trying to get it bigger here. Smalls are above the large, right? There's one, anything can happen on a 50-50, resulted in a pretty big loss there. This one is directly into a termination condition. But you do have the advantage of momentum. You take it in and you get back out on that little push back into the retest. And then Safia, why did you hold for so long? Directly into I mean, that's textbook termination, isn't it? I get it, with all the momentum taking a shot, right? And look at this exit, right at that termination condition. No triggers anywhere through. And then it gave you a bounce and it said, all right, Safia, look, divergence, get out. And you didn't, and it said, seriously, Safia, here's the second one. Right from the area that has been telling you that it's likely to stop. And you said, no, I hope. So from 98 to 11, you made 13, but you gave back a lot of it. Almost all of it, right? And guys, this goes back, this is kind of like what Mike's was. If you're going to, if you're going to trade into a termination condition, don't get greedy. These fibs are amazing, guys. There's a reason that you bought these fibs, because these fibs, the market reacts to them, right? And you know when price reaches it and the triggers are below, it could be a termination. It could be an area that reverses the market. Guys, you don't have to trade on hope. Safia, it was a beautiful entry, and I love your first exit. But remember, we're in this to get paid, right? All right, you have momentum, right? You have a clear path. You have no divergence. Great execution on this one, John in Alaska. Into that pivot stop out termination condition, right? So this is very similar. You're making the choice to trade into the termination condition with that much momentum, with no loss of momentum here, with that beautiful tiny window of opportunity. It's a good shot, and I think your management's great. You don't get greedy into the area. Nice job, John. It all starts with momentum, doesn't it? Is it just me, or does momentum make you feel better about everything? Strong triggers break things. Strong triggers create retests. Man, that first advantage, there's a reason that we cover it first. Great, absolutely, great trading. Termination. And guys, this is another example of how that momentum, look at the momentum coming into the termination condition. There's that bounce. It's hard to stop a freight train, isn't it? That's 6 points, right? 24 ticks that you didn't take. Why? Because it was into a termination condition. Gary, doing math on what you didn't get is going to have you chasing things. Or it may not. Let me rephrase that. Doing the math on the trades that you don't take, guys, is going to have you breaking your rules, thinking that you're missing out. I've seen it a million times. Then I say, great job not trading into it. Guys, crude oil's trying to figure it out. Again, what's the S&P doing? There's that termination condition. So far, it's holding strong, isn't it? Just waiting. Waiting for the best of the best. Waiting for that clear path. So what has to happen? Let's talk about that, guys. I only need one chart, right? I already have odds favorable momentum. I've got smalls above the large are wide. They're angled in the direction of the trend. But price reached a termination. Price reached an area, and the trigger lines have remained below. So in order to take a trade, what needs to happen? Are you guys going through your checklist right now? Are you saying to yourself, well, do we have a good top or bottom? We do have a termination condition that created a full reversal. Do we have odds favorable? We certainly do. Ooh, but my termination conditions aren't true. So I'm waiting for either a clear path, right? Or I have to wait for a full reversal. And guys, this goes back to that same plan that's been tested over and over. If you reach a termination condition, in order to look for your next trade, the triggers must roll from the high, right? And that'll set you up for one of those high volume area trades. It's not a high probability trend trade. The rules are a little different, but they use the same elements. You use terminations, trigger rolls, areas. And then if that termination creates all your triggers strong, you'll look for a trend trade. And then you're going to do that until you reach the next termination condition, guys. And when you reach the next termination condition, you go back into this if-then scenario. If the triggers roll, I'll look for a trade. If the area breaks, I'll continue with my trend trades. Trading the market is a constant state of if-then. If this happens, then I'll do this. If this area breaks and I get odds favorable momentum, well then maybe I'll take a trade to the long side with a clear path with odds favorable momentum. If this area holds, I'll need a full reversal, right? If the area breaks, I'll trade in the direction of the triggers. I'll trade in the direction of the momentum. If the area holds, if the trigger lines roll, then I'll look for shorts. Do you see how you never got an opportunity for shorts here, right? Large triggers remained up the whole time those price bars came back down. Guys, the market's making me work for it today. It's making you guys work for it in the form of patience. Is there something that you'd like to talk about? Is there a subject you want to cover? If not, I'm just going to blow up a crude oil chart. And I'm going to go back and I'm going to look for instances when I had odds favorable momentum and a clear path when I haven't reached an area yet. And I'm going to circle tails, guys. And I'm going to use this time to study. I'm going to come back. There's one of those 50-50s. There's a little pullback. No opportunities, right? If you ever get to the end of the day and you're like, oh my gosh, I didn't take any trades. I'm such a bad trader. Well, maybe there weren't opportunities. This is a great drill to see if there were. And we get back into the wee hours of the night, right? Somebody was doing something and they gave odds favorable, hadn't reached the one-to-ones yet. Guys, this is your drill to study. This is your confidence drill. This is the one to learn the recognition. So that's about a day's worth of circles, right? Notice that they don't all line up right next to each other. Sometimes the market goes sideways. Sometimes it doesn't have momentum. But if we wait for those circles, we can scroll back. We tighten things up a little bit. Let's see how many circles turned into area inside of favorable large triggers. Perfect entry, right? Opportunity for a little money before divergences took you out. Let's see what else. If I scroll back, there's your first entry. 3 divergences takes you out, right into the termination condition. No divergence, right to a mid-band, right at the large triggers. Market continues down. Guys, do you see how this works? Over and over. What am I doing? I'm developing trust in the rules. I'm developing recognition in the rules. Smalls below the large haven't reached the 1-to-1. Large have cleared the area. Pull back to resistance inside of favorable large triggers. Guys, if you were up at 2:57 in the morning, your day's done on one trade. Gary, let's see what you got. Terminations across the board. To which I reply, no thank you. I don't need to hope that areas break. I've got Fibonacci. I know where the deep pockets investors are going to react to the market, because I was smart enough to purchase Nexgen. Going back to this one, let's see if it fits the rules, guys. Great googly moogly, there it is again. Guys, if you're brand new, if you're iffy on entries, do this drill. Go back, circle, look. You're going to recognize that this is a pattern that repeats itself every day, every market. I don't care if you're on Tesla, Bitcoin, doesn't matter. If you're trading, who cares? Recognize the patterns, identify the advantages. Smalls above the large are wide. There was a reversal bar that provided a window of opportunity from the highest point of support to the lowest point of support inside of favorable large triggers. Let's see what happens. Whoops. With that momentum, can we identify where the market may be headed? What do you think? We're going to take this picture, guys, and I'm going to ask, how many of you are angry right now because you held out for the mid-band? Let's take a look at the checklist, guys. Are we coming from a good top or bottom? I don't even remember. I need a different picture to find that. Am I coming from a good top or bottom? Well, maybe lower I am. Not so much because it's just been up. Yeah, for sure. They put in a bottom. So let's go through the checklist. Let me find my stamps so John Novak's OCD doesn't go off the chart. Let me use this one. Good top or bottom? Yep. Odds favorable momentum? Yep. No termination conditions? Yep. Area inside of favorable large triggers? Absolutely. Guys, at the time of this picture, your entry from here went all the way up to here. And I don't know what happened next because I've been talking with you guys. Who waited for the mid-band and said, dang it, it didn't make it? With all this momentum, so Alan, you waited for the mid-band because you didn't want to leave that much risk? That's okay. So you're going to build trust, right? And that's all we're doing. Guys, the potential is always, well, the potential is always that it'll zing right through it. But it may go to that lower end, right? But Alan, the idea is, and I'm glad that you said that, odds favorable, right? Absolutely nothing in the way. And then did you notice? No divergence here. The smalls are up, everything is cranking up. It's going to be hard for it to get that low with this much going up. That's how my mindset, it helped me a lot because I used to do the same thing. I'm banking on that momentum on the 13.2. I'm banking on that clear path on the 13.2. That's setting the tone for the trade. All I'm looking is to take my piece of the pie. So from that highest point of support, it creates such an advantage. And there's one divergence, but one divergence isn't a deal breaker, right? It gave it a little push, created a pivot. Guys, at this point, if I'm in at 72, I'm already paid. I'm already break even. And it's okay. Don't kick yourself. Just turn it into a lesson, right? What's the lesson? The lesson is you got to learn to trust your rules. And it takes time, doesn't it? And watch this. My brother used to do this to me, and it used to aggravate me, but I think it's a great tool. Guys, is there anything about the 13.2 that says down? Is there anything about the 13.2 that says weak? Is there anything about the 13.2 that says there's something in the way? There's not, right? And remember that the 13.2 leads the way. With this look, and let's look at the pictures of this one, right? When that large crowd is cranking up, when that large crowd has momentum, when that large crowd has nothing in the way, guys, we're looking for this little group of yahoos that are fighting everything, trying to make the market go down. And the better it looks over here, the harder it is for them. And that's why we take that top of the window. And since you got in at 72, what's changed? Absolutely nothing, right? Your trigger lines are strong on both charts. Everything says up on both charts. You've had one loss of momentum, which is not a deal breaker. Pretty cool, right? It takes time though, man. Alan, you are so in the right spot. But here's what I want you guys to do. If you skipped that trade because you wanted the mid band, I want you to annotate it. Everything that we just talked about, take a picture. Yeah. Are you on simulator, Alan? And you don't have to answer that. That's personal business. But guys, this is why we do it on simulator. Even on simulator, you're going to get a rush, right? Even on simulator, you're going to get nervous. Even on simulator, you're going to be like, oh, I don't want to lose. I don't want to lose, because you equate losing with failure. Sun Tzu, right? I talk about it every now and then. Sun Tzu wrote The Art of War. He used to say, in order to be successful in battle, or something like this, I'm paraphrasing, to be successful in battle, you have to put yourself in the kill zone. And you have to be willing to lose, guys. And when you stop expecting to win every trade, when you stop expecting every trade to go in the direction instantly without any sort of tiny drawdown, you're going to start winning more trades. And when you stop worrying about the winning and losing and more about the execution, guys, that's when things come together, right? Yeah, draw the window. What a great tool. And Alan, I would be lying through my teeth if I told you that there weren't times when I had a limit order here. Because what if, right? What if it goes lower? You will honestly get to a point where you say, I don't care. I don't care if it goes lower. Mentally, I'm prepared for it to get to the bottom of this window, and if it goes beyond, I'll get out of the trade. Is two divergences a termination condition? What do you think, guys? Two divergences on the small chart is not a termination condition. Excuse me. Are the smalls still outside of the large? Can we all agree that absolutely nothing has changed since the time of entry? Absolutely nothing has changed. Your small triggers couldn't even weaken the large. Guys, if you were in this trade, you should still be in this trade, right? Everything still says up. Two divergences aren't a deal breaker. The momentum is still strong. A third divergence might create an exit condition, right? But with this momentum and this clear path, those are some great targets. Guys, you're watching it happen live right now. This isn't a hand-picked picture. This isn't me scrolling back and finding the absolute best of the best look, guys. This is a 100% rules-based trade. Your job is to learn how to trust it. Your job is to take so many pictures, annotate charts, ask questions. But Mark, what about the divergence? Divergence isn't a deal breaker on a high probability trend trade. 3 divergences. But Mark, the trigger's turned red. It's okay. They're still outside of the large. My favorite is, but Mark, how do I get into this trade? I missed the entry. Sorry. You're watching everybody else get paid. And that's why we trust. And it hurts sometimes. Does that make sense, guys? Rules for the entry, 100%. And then you just have to ask yourself, once you're in a trade, ask yourself, what changed? Guys, what if this divergence is true? When will I know? Right now, it's just potential. There's no reason to exit on potential. If it's true, I'll know it's somewhere right about there. This would be an appropriate stop, wouldn't it? That locks in $100. You've probably already taken $200, $150. If this divergence is going to be true, 2 ticks behind this reversal bar marker, I'm going to know. I can exit the trade because then it's 3 divergences in the same price range. If then, what if it never happens and it goes right to the fib? Wouldn't it stink to exit this trade on the potential of divergence only to have it do what it said it was likely to do? I know the potential is there, but until it's true, guys, it's just potential. Constant state of if-then. When you take the best entry, guys, if you were in at 72, by the time you got to 92, $200 worth of profit. Take it. You're in it to get paid, right? Everything still says up. Look at that potential. Guys, the potential is there that a plane will crash through your ceiling and kill you dead in the next 5 minutes. But it's probably not very likely, and until it happens, you're not going to live your life in fear. Should we just stare at it for a while? Did everyone get the lesson on that one? Trust the process. If you skipped it, you don't trust the process yet, and that's okay. It takes time. John Novak said you need 3,000 reps to really trust a process wholeheartedly. I don't disagree. I think that if you follow a simple plan, right? Let me see if I have that simple plan. If you follow a simple plan, guys, and this is the most simple plan I can come up with. I'm not even do that. I'm going to do this plan. Simple plan for consistency. Guys, this is pretty much my trading plan. I'm sharing it with you right now. Never fight 13-2 direction or triggers, ever. True story. I have pictures of what my perfect long looks like and my perfect short. There's my perfect short. Everything says down, pull back to resistance, getting out. What does my perfect long look like? I have to know, right? I have to be able to define it. If I'm not sure, I better go back and start a collection. But where'd it go? There's my perfect long. Odds favorable, strong triggers, good bottom. There it goes. In order to take this trade, guys, use the language. In order to enter the market, these conditions must be met. I've got my management defined, right? If it's a 50-50, I've got it defined. Guys, this is my entire trading plan. Notice that it doesn't say edge trades. It doesn't say HVA trades. It doesn't say momentum trades. It doesn't say do what John Novak did in the room earlier because he won, and that's got to be the only way to win trades. Just advantages. Guys, there's your termination condition. Price reaches, no triggers. Sit on your hands. Holy moly, look at that, guys. It made it to the fib. And nothing ever changed. Welcome to Nexgen. If you're brand new, I'm going to give you every tool that you need to be successful. You just have to learn how to swing that hammer, right? Oh, and look, right to the second. Guys, Fibonacci's unfreaking believable. Rules are unbelievable. I feel like we should get like an amen or a hallelujah or something, guys. Have momentum, have a clear path. Take that darn entry and get paid. You don't have that fib? Which one, 7210 or 7202? $10? All right. But you had 02, right? So what a great place to take money. Weaker triggers at 02. Would you be upset about $300 from your entry? I hope not. Guys, the goal is to get paid, isn't it? The goal is to make money. The goal is to be consistent. If you can make $250 a day, guys, per contract, do it on a 2-lot, $500 a day. Pretty easy, right? We just saw 3 times that. $2,000 a week, right? $8,000 a month, $96,000 a year on a 2-lot. Guys, it takes less than $10,000 to control a 2-lot on the S&P. Really, it takes less than $5,000. That's a pretty good return, wouldn't you say? So what happens to that $96,000 when you start going counter trend? You probably eat at least half of it. What happens to that $96,000 when you start fighting triggers? You're making it worse. Guys, what happens when you don't wait for the best entry? You keep doing it. What happens when you don't have momentum? What happens when you don't have a clear path? What happens when you form opinions? Stop giving away your profits, guys, because you're hoping. Embrace the advantages. Guys, this is what Nexgen does for you. We give you a set of rules to get a foundation built, right? A set of rules that have been proven to win more than they lose. A foundation that's capable of winning. Dad called it peeing in the wind. Yeah. But until you do it, you don't realize what a pain in the butt that is. How much money are you giving away on trades that aren't correct? I ask myself that sometimes. Guys, I'm not going to lie. I break my rules sometimes. I was telling my wife the other day, I had a horrible day last week. Horrible trading day. Not proud of it. And do you know what the common thread was? Is I fought the trend. I fought the trend on 5 trades, and I lost 5 trades in a row because I formed an opinion, guys. There it is. Dirty laundry out there for everybody to know that I'm human, just like you. So what I had to do is I had to go back and I had to study those trades. And I had to say, gee gads and little fishes, this is not conducive for a positive equity curve. And I committed to fix it, right? That's all this is, guys. It's making mistakes, putting yourself out there, understanding that you will make mistakes, that it's okay to make mistakes. It's okay to not know everything on day one. You're not judged for the mistakes that you make. All we want is for you to be safe, right? No matter how pretty this is, termination conditions say don't do it. Guys, no matter how much you want to be in a position, if you don't have momentum, it's not your best look. Jerry says he's long at 42.82. From back here. So let's look at 42.82. Smalls were above the large were breaking through. And at 82, he had a mid-band inside of favorable large triggers. Not the entirely best look, right? But he's coming from that bottom. He has that momentum. Everything says up. He chose his entry that was low risk. And look how he used Fibonacci. I don't know if you exited at 92, but that sure would be a good-looking exit, wouldn't it? +2, +10. 12 ticks is 3 points. What is that, $150? It's not so bad. It's a great day if you do it 10 times a day. Taking those quick little profits, those base hits. All right, guys, my voice is tired. I'm going to take a break. I've been doing all the talking. I want you guys to help me out on the last hour. Think about what you want to talk about. Think about the looks that you're interested in learning more. Guys, go back and circle something. You don't have to be in a trade to get knowledge, right? What is that? It's a termination condition. Take a picture. Put it in your spreadsheet. That's a termination condition. Take a picture. Put it in your spreadsheet. Get a little bit smarter every day. That's a termination condition. Just saying. I'll be back in 5 or so, maybe 7. Probably not 10, but I'm not making any promises, guys. Post your pictures, ask your questions. I'll be back in a few. Here we go. Last hour. Jerry says he went long on crude. Let's see if we can figure out why. 71.88. 71.88 appears to be a mid-band with everything up. Fight and termination conditions, right? Guys, that's okay. That's a decision that you can make as you grow with the software. And this is one of those reasons why I always encourage you guys, when you take a trade, show me a picture, write your rules. Your trade doesn't have to be my trade. My trade doesn't have to be your trade. I know Jerry's been with us a long time. He's using that database he has in his brain to recognize advantages, and he's making choices based on what he's doing. And he's using a market flow chart. That's it. Taking one more chart, adding confirmation. Guys, when you can do it simple, add to it, right? But if you can't do it simple, if you're not winning with a basic plan, guys, don't chase other people's plans. It will create challenges for you. Losing momentum, but we have a clear path, right? I don't have any areas inside of favorable large triggers. How could I possibly make a decision on where a pullback could be expected to go? Is it 12? Is it 10? Is it 5? Is it the mid-band? Is it all the way back to 53 because I'm losing momentum? It's indecision, right? I don't know. I don't know where it may go. I'm going to ramble for an hour, guys. I'm going to rewrite this and update it a little bit, but it holds true, guys. To minimize your learning curve, post your pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. Guys, I can't tell you how many times I see simulator millionaires. I jumped in, I jumped out, I broke rules, but man, look at me, I'm rich. And then they go live and there's that long-term failure, guys. They got lucky on simulator. Murphy comes in. His laws are laws. And you lose lots and you get frustrated. How are you going to know the difference between right and wrong in the beginning, guys? You need feedback from us. I'm here to help. John Novak jumps in the room. He's here to help. Your salespeople are very educated. They're here to help. If you place a trade on the simulator, if you participate in class, there's no risk of loss or capital. And I think that's a key thing, guys. When I first started, and who else is with me on this one? Who was terrified to lose the Monopoly money? Right? Who would be on simulator and still get sweaty palms and think to themselves, oh, I hope this wins, and move their stops too soon and not let it play out, get in late, get in early because they're terrified of losing Monopoly money, guys. Keep it on simulator until that goes away. I've done it. Oh my gosh, because you'll get to a point where you don't even do that with live money. But you need someone to tell you what you did right or wrong when you're new, guys. And that really is. It cracks me up that he put this as part of the educational magic that we offer new traders. But it really is educational magic, guys. It is so well laid out in front of you, and all you have to do is follow the path. And if you follow the path, you're going to get to where you want to be. Use this outline for education. That's it. You can't swim until you get in the water. What's that outline for education, guys? It's what we talked about earlier. Learn the trigger rules for when it's okay to trade. Simulate. Notice that it says post in class. Simplify. Simplify, simplify, simplify. You know who I'm talking to, right? Simplify. If right now you're going, oh crap, he's talking to me, I probably am. Simplify your trading plan. After class, get to that market replay, guys. Retrade the day, fix it, take pictures. Repeat this process every day until you always take the correct trades. That's it. We can't lay out your path any clearer for you. I could hand you 1,000 shovels and you may never dig a hole if you don't get in and get the work done. Guys, populate your spreadsheet using the checklist, right? Using that checklist, making sure that you're keeping yourself accountable to following the rules every time you take a trade. Post the trades in class with your entries, with your exits. Make sure that your rules are annotated. If you're using Snagit, you can copy paste, right? Just put it right on there. Copy paste your checklist rules. If you're not using Snagit, if you're using that TechSmith capture, guys, you're going to have to actually write. I know, how archaic. Who does that in this day and age? You're going to write your rules on the chart. This is why I got in. These are my rules. Hold me accountable, Mark. Help me understand what I'm doing great. Point out what I'm doing not so great. Help me get to where I want to be, and I'm going to do my part by posting the pictures. Study the historical chart setups, guys. Circle those tails. Use the pictures generated in class. Grab them from the Discord channels and create at least 15 images a day, 300 a month, 900 over the course of 90 days. Present them in class, annotated with your checklist, preferably copy-paste. 15 hours a week, Monday through Friday. You're going to receive feedback on your ability to follow your checklist. I'm going to paste this in the room. Guys, you're never going to hear me say, whoops, wrong one. You're never going to hear me say, hey, way to break every rule you told me that you were trying to follow because you ended up profitable, right? What you are going to hear me say is you're going to say, hey, you told me that this is what you're looking for. You told me this is what you're trying to trade. And let me show you how you kind of deviated from the plan that you told me you wanted to be held accountable on. And then you're going to insert the trades that follow the rules into your spreadsheet, right? Every time you have a rules-based entry, you're going to put it in the green section. Guys, I gave you one with 200 trades on it. I'm going to get you started. Here it is again, right there in the room. Every time your rules are met, post a picture. Make it easy. And then that's your entries, guys. Rules-based entries, mechanical entry. You're going to have to manage those trades. In the beginning, a very mechanical approach eliminates emotion or opinion, tends to be the most straightforward approach for new users. You can alter your plan after you're done with the education, guys. When your chart reading is solid, alter your plan. If you're unsure, keep it mechanical. If you trade two contracts, right? Take your profits, have them preset. When you're going to move your stop, keep it mechanical. But allow yourself a minimum 30 to 90 days to practice the mechanical approach to a checklist-based entry and an easy automated exit, and you can adjust your targets based on experience later, guys. That's your plan. Entries, mechanical, emotionless, opinionless, consistent. Exits, mechanical, methodical, emotionless, consistent. And then when you're always taking the right trades, guys, when you're following those rules, when you're winning more than you lose, and you feel like it's time to go live, accept that you may be less capable of a trader than you initially believe your first time out, guys. Going live for most people creates an emotional response. It is akin to that first kiss, right? You're nervous, you're anxious, you're sweaty, you don't know what's going to happen, but you know that it could be pretty cool. Hope you don't mess it up. And that's going to make you alter your plan sometimes, guys. Everyone feels entitled to win, but only the people that trade well do. You don't have to risk your capital. You can risk somebody else's. You can use a prop firm like Apex, and they run sales all the time, and for less than $200, you can trade up to $50,000 worth of capital. Guys, right now it's like $34 to control $50,000 in capital. The best part is you keep the first 25 grand, 90% after that. And if you make that $3,000 profit before the $2,500 loss, they give you the $50,000 account to trade live. And you can add up to 19 more funded accounts if you wish. You can control $1 million with very little out-of-pocket investment, guys. It's like trading $900,000 of your hard-earned. So starting out, use their money. You'll thank us later when you realize what you did not know about yourself yet. And when you can make money in a real-world setting with someone else's money, Trade your own money with their funded accounts. Remember, there's no penalty for being cautious when you start trading live. The actual harm comes from thinking you're a better trader than you are and blowing out your large sum of capital. Guys, this was put together on a Sunday conversation via Skype. We both had coffee, and we were talking about how do we get these guys where they need to be. And we wrote it out in its most simple form. I'm actually rewriting this afternoon. That's my afternoon goal. Guys, if you embrace the plan, embrace the simplicity, I've never met anybody that follows these 3 simple rules and doesn't win, right? So if you're not winning, instead of chasing somebody and trying to do what they're doing, why not back it up, guys? This checklist came about because a gentleman called me one day and he said, Mark, I'm losing. Every day I'm losing. Every day I'm trying to predict where the market goes. I'm trying to catch this trade and that trade and these trades and those trades. And I'm not catching any of them, Mark. And I said, well, let's simplify. Let's get to the root, right? Let's create the foundation. That's where this came from. That's where this simple plan came from, guys. That's where this KISS trading plan. I don't know. I think 20 accounts, Safia. I don't work for Apex. I don't have a definite answer, but let's look at it. If you can do up to 20 accounts, and their biggest account appears to be 300,000, 6 million? That's kind of cool, isn't it? But here's the second side of that. If you're not consistently winning, how much of that 6 million are you going to see, right? Guys, it's easy to get wooed in by, oh, look at all the money I can make. I'm going to have a Ferrari, and I'm going to have a Lamborghini, and I'm going to have a mansion, I'm going to own an island, and life is going to be amazing. And we all run to the finish line, but we forget about the process that gets us there. Keep it simple, guys. You'd be amazed at how easy it can be. Termination condition still holding, isn't it? Is anyone clinging to hope? I know that price reached resistance. I know the trigger lines didn't go through, but damn it, I'm bored. I'm going to take the trade. We've all done it. If you say you haven't done it, you probably haven't been trading long enough. You're waiting. And Safia, that's a big win, right? We recognize patterns in people. That's a big win. I like that. I'm going to start going through my pictures. Let's see. Man, you know what, John P? It would be awesome to have a class on Apex, right? All the tips, tricks. I don't disagree with you. But I am not an Apex. I'm not an Apex employee. I don't know all the time. I know what I do, and I'll answer any question that I have. But man, they've got a huge knowledge base here about it. And in the traders chat, there's a huge knowledge base over here. John P., if you want to help me make that happen, and guys, this is for everybody. If you want to help me make that happen, email me questions. Or, even better, email me answers. Yeah. So if you have some real life experience that you found helpful, let us know. Let's compile, right? I almost feel like, and I may be mistaken, I almost feel like that's been done. Check this out. Apex funding info. Man, John Novak thinks of everything, doesn't he? Go through this, John P. And if there's more, and all of this comes from real world, right? He is, isn't he? It's ridiculous. We were laughing about that earlier. I don't do well sitting still. He does even worse sitting still. But guys, if it's something that's going to be helpful to you, chances are John Novak has made it available to you, either in Discord or on the educational page. Sometimes all you have to do is ask. So JP, I wouldn't have even thought about it, but there it was. Man, termination conditions still holding on the S&P. It's okay to go get a hot dog, have an early lunch, right? Guys, there's your strong trending. If you bought the mid band, it's probably game over. You started with 20. Bobby, do you know my thoughts on it? And everybody's different, right? Guys, if you can't pass one, who gives a crap how many you have behind it? Right? If you can't pass one account, focused on one account, not worried about anything else in the world other than one account, it doesn't matter, does it? Why blow out 5 of them? Why blow out 10 of them? Why blow out 20 of them as you kind of come to terms with what you're doing? Get funded on one and then add another. That's my thought on it. I can't think of any reason to pay $500 a month to blow out 20 accounts if I'm not trading consistent yet, right? Because you know whether or not you can follow your rules on one. Guys, if I trade a one lot, if I trade just a one lot, that's it. Nothing more. Don't I know at the end of the week whether or not I'm capable of following my rules? I can look at my entries. I can look at them. I can look at my rules. I can look at my checklist, guys. On a one lot on one account, I know whether or not I'm capable of taking the correct entries, don't I? Why put all that pressure on yourself? Why put the pressure of 20 accounts? And one account gives you your data subscription. You're waiting for the triggers to roll off that termination condition. I like it, Gary. Those HVA rules. Nice. Mid-band reached. No HVA. Right. Not taking that trade. And good job not jumping in trying to go long, right? Support, support, support. Term. Gosh. And guys, I want you to know something. I can't stress this enough. My thoughts are not the gospel truth, right? My thoughts are not the gospel truth. Usually if I interject or muse about something, it's because I've watched people struggle. Remember when we talked about with weak triggers, how do we know if it's going to be 12 or 10 or 5? We don't. How do we know where the retracements? It may be a termination that creates a full reversal. But I'm still right into a mid-band and support, guys. So, in regards to Apex, I'm a fan. For 34 bucks a month, you'll find out whether or not you can follow rules. If it makes you feel better, spend the 600. Or take that 500 and go have a nice steak dinner celebrating your ability to follow rules. Stuff to think about. Let's see, what's next, guys? What else do you want to talk about? You want to talk about the experience curve? This is Sophia's favorite picture. What are you going to expect with Nexgen, guys? You're going to start off and it looks like fun. And you're going to daydream about everything that you're going to buy with all that money that you're going to make, right? Because you paid for software, you're going to magically be the best day trader in the world. And you're going to be like, whoa, I got to learn stuff. And that's cool. Guys, you have to learn stuff. That's my whole job, is to teach you all the stuff that you need to learn. All I need you to do is raise a hand. You could say, hey, Mark, I don't understand. What the hell is a limit order? And we'll spend 5 minutes on limit orders until you have it. How do I move a stop? How do I create an ATM strategy? How do I recognize odds favorable momentum? Guys, if you're not asking me questions, I can't give you answers. And then you're like, I have no idea what I'm doing. Guys, I am flying blind. It is the blind leading the deaf, you know, and then right about 30 days in, you're like, I'm brilliant. I don't know what this 90-day talk was about, because I know everything. I haven't really participated or posted pictures, haven't really asked questions, but my simulator account is up $1 million. I must be ready to go. That's what I did. Right here, that $5,000 is the Mark Novak reference. Guys, I lost $5,000 in 22 trades. Probably about 25 minutes total time in the market. 22 losers in a row, and I had absolutely no idea why I lost. I didn't even know why I got in. I definitely didn't know how to manage it. And guys, I blew out my account, and I almost walked away from Nexgen. I'm not going to lie. I wasn't teaching classes yet. I was just trying to learn the software on my own. I had been begged, well, just short of begged, to follow this path. John Novak said, post your trades in class, use the spreadsheet, take pictures of your rules being met, to which I lovingly replied to my older sibling, to hell with you, John Novak. What do you know about trading the markets or software or anything? And I blew out. And I hit this, I don't know what the stars mean there. I don't know S. And guys, this is a very tough point for a lot of people to get to. That realization that it's going to take some work to get to where you want to be. The realization that maybe that path you ignored isn't such a bad idea. And then you start that path, and then you start posting pictures, and you start annotating charts, and you go back and you study your checklist, and you study your spreadsheet, and you're like, oh, it's clicking. Let me keep studying. Not, oh, it's clicking. Let me go live and ditch the class. It's, hey, I still want to get help, and I want to end up where I'm at. And then you end up where you're at, guys. This is your path. It's the path for almost everybody in the world. No trade on the ES? Nope. David S., those sons of guns didn't give it up, did they? But that termination condition sure worked. Who went long into that termination condition? Anybody? I hope not. Gary, that's it. Termination, no trigs. No trades. You have two choices when this happens, guys. You can be aggravated that it didn't give an entry. You can be upset that you didn't get paid. Or you can just take a deep breath and relax and say, you know what? My rules weren't met. The advantages weren't present. I didn't take a trade. I'll wait. Because my rules have been proven to win more than they lose, right? Guys, that's a bad top on a 50-50 divergence printed. And they're making you question everything because that market went right from an area of resistance inside of favorable large triggers. If you took this trade, you're playing an if-then scenario, right? If this divergence is true, I have to get out of the trade. I recognize my trouble spots. I probably took quick profits. If this divergence is never true, maybe I stay in the trade. But it's coming from a bad top, isn't it? That's not a termination condition that creates a full reversal. It is odds favorable momentum, but that is 50-50 in its purest form with a loss of momentum. If you take that medium probability trade, nothing's changed, and it's still going down. 90 represents a big trouble spot, doesn't it? That's almost $200 worth of profit right there. It's right into a mid-band from divergence. And Jerry went short from 72.12. Right on that pullback to the large triggers, right, Jerry? Guys, it's a 50-50 trade. But when you see this trade set up 100 times, you know how to take it with a better chance of success. But if you're brand new, let it go. Just let it go. Guys, I could give each of you a paintbrush and a set of paints and ask you all to paint the same thing, and you're going to do it different, right? Everybody's going to paint a different picture, even if it's the same subject. You and your yellow bars on the market flow, Jerry. Crazy talk like that has me believing that you have a trading plan that you follow consistently. That maybe you spent time studying looks and decided that they create advantages. And because they did, you chose to incorporate it into a plan that tends to be pretty successful. What a thought. Just a few years. It takes time though, doesn't it? How's your boy doing? Is he still trading? Or back to the salt mines? Guys, it's a family affair sometimes. When you get it, you're excited. He has a new job. Good for him. Tell him we said hello. And tell him help's always available if he needs it. He's got a ringer in the house, though. He knows. He's got you. So, good stuff. Guys, we have 30 minutes left. I'm going to take like a 3-minute break. I'm taking a mid-hour break because there's just not a lot to talk about yet, right? Nobody's posting pictures. Nobody's asking questions. So I'll be back in just a second, guys, and when I get back, you out of here, Jerry? You too. Appreciate you being in here. I'll be back in just a second, guys. Mic silence for just a minute. All right, guys, 11:34 in the a.m. Crude oil is pushing down, but 50-50. Now there's multiple divergences. I don't know what your rules say about 50-50s. Look them over. The S&P went from a termination to a termination without blinking an eye, guys. If you think that institutional traders, if you think that the deep pockets that make the market do what the market does don't know about these Fibonacci areas, you're kidding yourself. To the tick, to the tick. Guys, you have the exact same information that these institutional traders have. You know where they're most likely to react. Look at these. How many times does the market stop to the tick, guys? If you want to build trust in termination conditions, just start circling. Areas reached, no triggers through, guys. If that doesn't keep you from trading into termination conditions, nothing will. But Mark, here it extended a little bit. Yeah, but it didn't make it. The triggers never made it. But the smalls almost made it. That's a 50-50. Should we see what it looked like on the 50-50? Let's put a circle right there, right at the midnight line. Multiple divergences on a 50-50, and I'll be darned, the market didn't go up. Pretty cool, right? Guys, you have the rules that you need to be successful. Can you follow them? If you have a misunderstanding, maybe you don't quite get the concept, I need you to ask. You see what else you can do? Guys, if you're looking at your charts and you're confused, take that picture and go, hey, Mark, is there a trade? You guys ever wonder that? Hey, Mark, is there a trade? And what do I always reply? Are your rules met? Well, let's find out. Chadwick says, is crude oil setting up for a short if it pulls back into favorable large triggers? Chadwick, what do your rules say about a 50-50 trade with multiple divergences? That's the only way I can answer that question. My rules say stay out as well, especially from a bad top. Not everybody's do. Some people say, with that much momentum, with everything going down, and even with the small triggers angled down, there's a lot of people that'll take a shot at that one, right? They're willing to risk it. Me personally, I don't care for it. But that doesn't matter. I don't care for blondes. No offense if you're blonde. I like a brunette. We all dig our own stuff, right? We all have what makes us comfortable. I don't like strawberry ice cream. I like chocolate ice cream. Not a huge fan of chicken salad, but I do love tuna salad, right? It can bounce from the midband, or it could smash through it and drop to the depths of hell, David. But if my rules aren't met, I won't be in it to find out, right? It could rocket up to 110 from here. But if my rules aren't met, I won't be in it, right? I'm just going to be on the sidelines waiting for my advantages to be present. But David, you're absolutely right. If I have a bad top, not from a termination condition, this midband is a great bounce point. And then what typically happens? They look for that next Fibonacci area. Doesn't mean that I'm going long here, but it means that the likelihood of these shorts goes down just enough to keep me out of the trade. These divergences are enough to keep me out of the trade. And guys, I have zero regret or remorse about missing this trade, because more times than not, when I take a 50-50 trade with multiple divergences, it takes my money. It beats me up and leaves me at the curb. And I get mad at the market for letting me break my rules, right? Because it's the market's fault. David, I think that's a great read. A bad top into a midband, multiple divergences. How many advantages are you willing to give away? But how hard is it to say, but everything's going down, I want to be in that trade, I want to break my rules? Because if it works, I'll be rich. But if it doesn't work, well, then I'm one step further away from qualifying my Apex account. I'm one step further away from my goal for the day. And if there's anything that I've realized, is that wins are only as good as you allow them to be, right? If you make $200 a trade, that's awesome. But if you take 10 trades during the day and 5 of them don't fit the rules, how much of that victory money are you giving away, right? Let's say I'm having a great day and I take 3 trades and I'm up $900, right? I follow the rules, the advantages were there, and I start feeling invincible. I start feeling 10 feet tall and bulletproof. So I decide to fight strong triggers and I get run over, and now I'm down to $700. And then I get mad about it. I'm like, but I decided it should go down. I'm going to take it again. And now I'm down to $500. Have you guys ever done this? And then you're like, well, if this market won't give me the money, I'll go to the other one. Well, I know it's a termination condition, but I just lost $400 and I need to make it back. And guys, now my account's at $300 for the day. And I'm so pissed off. And it looks like there's 3 ticks on this one that says it's going up. So I enter directly into that termination again. But I double up because, man, this one has to work. And now I'm down $200. And you're looking at your P&L and you're like, geez, I'm down $200. But you're not, are you? You're down $1,100. Guys, winners are awesome. Don't give your winners back by breaking your rules. Man, Chadwick, I can talk about it because we've all done it, right? How many times can you lose through breaking rules to make yourself so sick of it that you stop? I haven't found an exact number. Some people do it for years. Some people do it for decades. Some people do it for a week and they're like, well, this is stupid. I'm doing this to get paid. I should have a clear path with no problems. I should have odds favorable momentum. It's up to you. Who likes doing challenges? Like who, if I put it before you and say, hey, I triple dog dare you to just follow this checklist for 5 days, guys. Take 5 days out of your life where all you do is check yes to every one of these. Who thinks they could do it? Anybody in this room? Sounds easy, right? Is anybody willing to just do this for 5 days? To have a strong top or bottom, to have odds favorable, clear path, and an area inside, and take every trade. Or even better, who wants to do this for me? Who needs to study? Market replay, guys. I won't make you sacrifice your trading time. Who wants to market replay 5 days and show me every trade that takes these? Does anyone want to do that much work? Or do you just want to keep spinning your wheels? Sounds aggressive like that, doesn't it? Why wouldn't you? Why wouldn't you take this simple plan and market replay it for 5 days and see what the results are? And guys, at the end of the 5 days, if you were 80% winners, would it be enough to make you only follow that checklist? Probably not. There it goes, huh? And David, it could have bounced from the mid-band, right? But the sellers had other ideas. Guys, when I was a personal trainer in a different life, everyone told me that what they were doing was perfect. I eat perfect, Mark. I don't know why I'm fat. Mark, all I do is eat 100% right. Like you could build an entire training regimen around my diet. And I would say, cool, do me a favor, take a picture every time you eat something for the next 24 hours and send it to me. Most people stopped in the first couple hours because what they realized is that people love to break rules. Most people that tell me that they're not consistent and I say, hey, just trade this checklist for 5 days, make it a day. Some 2, right? Some people make it 2 days. Most people would rather be active than profitable. My goal is to keep saying the same darn thing over and over and over and over again until you believe me. And then your job is to keep taking the same darn trade over and over and over again until you believe it. So you never miss it, right? So you never miss a trade when the rules are met. Big deep breath. The cookies count. Amen. Guys, I apologize if I sound preachy sometimes. I don't mean to. Your success is my goal. It really is. It reflects well on me when you do well. But I'm not really worried about that. Guys, I want you successful, right? Show me a picture, Chris. Today is your gym day. I like gym days. All right, Chris T is going to show us an example of an HVA trade. My guess is that it's probably going to be on the S&P. Control V. If you're in the pop out, Control V will put it into that chat box. Man. See, guys, I've made every mistake you guys could ever make. I know the solution sometimes. So let's take a look. All right, so good top, termination condition. I like it. Divergence. I don't know. Do you have any rules that say divergence for your HVA rules? HVA magenta line prints from white bar. Place sell order at magenta line. All right. So Chris, if these are your rules, they feel incomplete, right? So I'm going to do this. We're going to take your picture. Whoops. And I'm going to go to the tutorial section. And I'm going to go to the HVA rules. He changed them a little bit. And I'm going to take this picture and I'm going to put it on your picture if that's cool. It's there, Gary. Awesome. Guys, I know it seems ridiculous, but this is good. And Chris, I love your chart read. I really do. I think that it's a good read. You're noticing a lot of things, right? You're talking about that good top, that termination. Man, that's rock solid on the 13-2. And when you look at this, good top or bottom, reversals or breakouts of Fibonacci are preferable. Make sure the T3 trigger lines don't break beyond the area. It's extremely important that you pay attention to the location when doing this trade. So Chris, we'll call that rule 1. And we'll say rule 1 met, right? Perfect. Large chart leads the way, guys. It always does. What's rule number 2? No termination. Do not, under any circumstances, trade directly into a Fibonacci-based termination that has the potential to reverse the market. Check for room to your profit targets. The more room, the bigger the target. That is a definite termination condition, wouldn't you say? And it looks like it was already hit. So Chris, if I were going by the rules, if I were going simplicity, if I were making a checklist and no termination hit was one of those rules, that might be a deal breaker for my HVA trade. And then it says rule number 3, entry at the HVA. Pinpointing the entry area involves looking for the T3 market flow HVA line that is positioned inside the smaller chart. Small or large triggers, this identifies the area that will serve. And HVAs can also be used for trend trades, absolutely. So Chris, if we look at yours, there is an HVA line, but all of your triggers are up. And one of the things that those rules used to say, and I'm not sure why they don't now, is you want your triggers to roll, right? At least be on the correct side. So the smalls are on the correct side here, but we're into support. It is an HVA line that still fights an awful lot. Does that make sense? And it worked. And it did work, Chris. And that, I think, is one of the challenges. The divergences helped. I agree. The third divergence helped a lot. And man, sometimes there's just not a way to get it done. But your best bet would have been over here, where that trend on the 8 range kind of confirms that that top is going to hold. And you never really got that. They released the hounds before you ever got that level of confirmation. Does that make sense? One of my favorite rules for the HVA trade, guys, and I think it's probably one of the most important rules, is let those triggers roll. If it's really going to be a top, let the triggers roll. If it's really going to be a bottom, let the triggers roll. And here's my old favorite picture, right? There's your first HVA with the triggers still up, and they tend to get run over. But when everything agrees, it takes a lot of the stress off, right? It makes it so much easier. And yeah, me too, Gary. And you know what's cool is check this picture out. Let me find it. Maybe it was under term. Chris, this is my might versus has picture. I don't know if you've seen this one. So what is it? It's a top, right? It's a termination condition, but everything still says up. And if you try to be the first, you typically get bumped out. And then if you do it again, they bounce up. But roll on the 5-1 or roll on the 8. Roll on the 8. Let that 8 range roll. Because when you see all of this, I thought there was an HVA line in there. There was here. There was an HVA line here with all of the triggers still up, right? But if you let the 8 range roll, if you let the smalls get to the correct side and then sell that HVA line, huge advantage, Chris. There is a huge advantage in letting them roll on the 8 range. And if they don't roll yet, if the large don't roll yet, let your smalls be down strong. At least have that small momentum. But what's cool in the picture that I show here, and this is that patience piece, is this price from the first hit is like the exact same price when everything's in that advantage phase, right? But you don't have to get stopped out and then stopped out again and stopped out again and stopped out again and then skip the one where everything is in place. Does that make sense? My experience is that you have a much better chance of success letting things roll. So guys, what do we think? Termination creates a full reversal. Full reversal gives odds favorable. Odds favorable puts us into that 50-50 range. Some of you may be waiting at the top of that window saying, man, if it comes through, I'm willing to take it. But if divergence is true, I'm going to cancel. Right? What do your rules say? That was a great question. Chris, thank you for letting me talk about that. And if you need me to expand, let me know. All right, Gary, I'm going to correct you lovingly. All right. Gary, is that a termination? And we can do this as a classroom as well if you want. Price hasn't hit the fib, right? So not yet. Guys, don't let things that aren't scare you. That's a target. If price hasn't reached that fib yet, it's a target. So Gary, you have strong triggers, right? Maybe a 50-50 here, and there's a pullback directly to resistance inside of favorable large triggers. That's a target. If you took this short, man, go cat go. And then if you were waiting for confirmation, you got it, and you still had room to that target. So guys, don't call it a termination condition if it's not. And I know you guys are going to find this just crazy. But, whoops, where's my 101 class? If I go to my spreadsheet and I go to termination conditions, I actually have something called term or target. And I go through this process a lot in my head, guys, because when I first started, if I was anywhere near a fib, I panicked. Ah, it's a termination. No, it's only a termination when price hits it. So this is a termination. Let's make it bigger, right? This is a target. In order to decide if an area is a target or termination, guys, a termination, price reaches, no triggers break, right? A target, price hasn't reached that area. We're using momentum and Fibonacci to understand where the market is likely to go. Did it go there? Looks like it did. Now, divergences all the way down may have kept you out of the trade, right? But certainly not a line that hadn't been reached. And that's kind of the point I was making there. I'm glad you posted that. And guys, the market's on its way down. That's what the momentum says, right? That's what the lack of termination conditions say. Look for your rules to be met. If they are, take a trade. If not, sit on your hands. Guys, that's it for me today. Thank you so much for being here. Thank you for your questions. Hopefully tomorrow that market picks up steam.